There you go. Those are the bankers, and they're talking about the new base rates. To talk about this and what impact this has on the entire loan market, if you're in the market looking for loans, how does the scenario change? Harsh Rungta, CEO of Apnapaisa.com, joins us on this show. Always good to have you. And of course, we have Sumit Ved, our friend at Smart Money, a certified financial planner. We'll be looking at the impact over here, and also, like we discussed, we'll be talking about the insurance space and ULIPs in particular. But to begin with, Harsh, now looking at the new base rates, people in the market looking at this space very closely. Are loans going to be more expensive? That's the real question that they are looking for answers to.
So I think the base rate is a mechanism, right? I mean, interest rates are determined by market forces, and clearly I think right now the market forces clearly indicate a hardening of interest rates. So whether that will happen tomorrow or whether that will happen in a couple of weeks, I think clearly we will see increased interest rates.
Right.
Although the base rates that has come out, the 7.5% is the bottom end of the expectation curve.
Right.
I mean, clearly SBI had indicated 7.5, 8, and they've decided to go for 7.5. So that would be a bit of good news. But the clear thing is, I think the base rates are a much more transparent mechanisms.
Right.
So, and interest rates during the tenure will keep rising, falling, etc. Hopefully, the way the base rate mechanism works, customers will now hopefully start getting benefits of reduction in rates as and when the interest rate cycle turns.
By when can we expect that to happen? Right now, effectively looking at this kind of change coming in, if I'm in the market looking for loans, how does this change the scenario for myself?
So, if I was a borrower out there today, yes, for me, there is a little more confidence that floating rates are genuinely going to be a little more floating than they were earlier.
Right.
I mean, earlier we have had this discussion on this show also many times. Floating essentially meant that it floated upwards. And when interest rates fell, existing customers rarely got the benefit. I mean, the typical wife versus girlfriend syndrome, as I
yes,
said. So I think clearly that should change. I think it will change.
Mm-hmm. Do you see this kind of when you're giving advice for people who are sorting out their portfolio and looking at managing their loans right now? What do you see fundamentally changing in your advice to them?
I think one profound change which this will do to the whole industry is the credit profiling will become very, very relevant. Okay, credit profiling even at a retail individual level will become very important.
Right.
Today we have credit bureaus coming up in India, and one of the ways which I presume the way base rate mechanism will really help in calculating the effective loan rate for the end consumer will be evaluating and discussing or based on the credit profile of that particular individual. So us as financial planners now will have to sit with families, make them understand the importance of credit profiling, work with them over a period of time to improve their credit profile. In other words, help them in getting much better rates.
That's right. Getting better rates, that's the crucial point. Something that we always discuss here on Smart Money as well. How do you go about doing that? Because there are various routes by which you can actually approach a bank, explain your situation, get the best rates out there, and for that you need to be proactive. Do you see a lot more of that happen, Harsh?
So I'm a little bit of a pessimist on this credit profiling being used to differentiate customers. I mean, that had nothing to do with the base rate, right? I mean,
sure. Yeah, absolutely.
The credit bureau has been around for quite some time.
Yes.
It has reportedly about 140 million cases, right? I mean, that's a whole lot of credit history that they are carrying. Till today, we do not see a retail product which is differentiated based on your credit history. It is used as a negative filter. You have bad credit history, you won't get it.
Right.
But you have good credit history. Do I get a better rate? Do I get it quickly? Not yet. I think we'll get there. I completely agree with Sumit that we'll get there. I would not be sanguine to assume it's going to happen in the next quarter.
Right.
But I think we are getting there slowly. And the scorecards will become more relevant, I presume.
Also, we've talked about teaser rates in the past, and now this effectively kind of closes the possibility of that. And when you see, do you see that still happening? The rate wars between banks will still happen, you think?
In a way, the rate war has happened. You know, there is 7.5% and 8%. So there are two base rates already which is coming. I think that's fair. That's fair as per competitive.
But the teaser rates can continue as long as the teaser rate for the first two. I mean, so it's for the bank to decide. As long as the teaser rates are not lower than its base rates, there is nothing that prevents teaser rates to continue. So the kind of
fluctuation, and then you go around fishing that much more because the rates are so varied. Now, does that effectively end when you have a fixed base rate and coming at an 8%, 7.5%, where the difference is not that much? So the kind of cost that you incur while moving from one bank to another becomes that much less.
0.5% for a home loan is huge, Vikram. So, I mean, you're talking of 0.5% per annum over 20 years.
Right.
So it's not a small sum of money.
Right.
Typically, if you have a loan that's at least 10-15 lakhs and it's outstanding for more than 5 years, even a 0.5% shift would make sense, even if you have to pay a 2% prepayment charge.
Right.
So 0.5% is not low.
Right.
We have situations even today where you have a large amount of people who are paying 13.5 even today, supposedly floating rates, 13.5. Now those are the kind of people who should move to at least this scenario, so that they are able to take benefit of a floating rate that actually floats.
Right. So a little more rationalization coming into that space. So what are the good things and what are the bad things? And coming to what people need to do, people who are already sitting on loans right now or in the market looking for more right now for home loans, etc. And like you're saying, 0.5% can be quite substantial. What should they be thinking?
I think first of all, I'll reiterate the point which Kishore said right in the beginning. It's the transparency. I think that empowers the customer. So this move has done that. And we as customers and their advisors should really push for more transparency by asking relevant questions to banks. That's the first part. The second is the change has just started. I think we need to wait and watch what this base rate will result in, what kind of products they will come out with, and by when they come out with kind of a product itself. So right now it's wait and watch kind of a game itself. Look at what PSU banks are doing, look what private sector banks do, and I think then as a sharp, shrewd Indian customer, play against each other and try and get your best rate.
That's right. Something that you've always suggested, haven't you, Harsh?
Oh, absolutely. I mean, that's what Apnapaisa is all about. Come, compare, take the best.
That's right, yes.
And I think essentially I agree. I mean, really, you are going to continue to see a war. Because I think the current crunch on liquidity notwithstanding, I think there is appetite now that banks have, especially for home loans. Okay. And so clearly, customers with good credit track records, it's a good time to be. But you need to be active. Again, I think that is the. So I mean, if you're
you need to apply yourself.
I mean, nobody can help a customer who's today paying 13.5%.
Right.
I mean, and we have people in our office who are paying that. So I mean,
so if you haven't been able to create converts out of those,
so I mean, the problem is sheer inertia.
And sometimes you get very laid back, and this is where you really need to save. Sometimes you get penny wise, pound foolish, but really the real saving, the real active kind of being able to manage your loan situation comes in over here, and you have to scout the market to see where you're getting the best kind of deal.
Yeah, Vikram, I'll put a word to that, and this is what my experience is. There's natural fear of finance. Okay, and that's exactly what puts this inertia out there. And I think you are doing a great job as a channel, and we all as intermediaries need to do to help people deal with this natural fear of finance.
We'll do more and more of that. Sumit,
I think the financial planners have a key role to play because they are the financial doctors.
Absolutely. So we'll have Sumit on the show going ahead from here, and right now we'll say goodbye to Harsh Rungta for giving us this understanding of base rates and how that's going to impact our lives.